Okay, welcome back. Bitcoin's been hovering near its all-time highs around 104K to 107K. So the big question is, what's keeping it up there? And what risks should you know about?
Well, the material suggests some really significant shifts, especially around regulations and big institutional money. Seems to be creating some real positive pressure.
Okay, let's talk about that positive momentum first. It hit that new high, 111K, back on May 22nd.
And it stayed above $100 K since then, pretty much. That level, $100 K, it's looking like strong support, not just a number.
So what's the fuel here? The sources mention regulatory clarity.
Exactly. A few big things in the U.S. The SEC dropping the Binance suit, the House passing a crypto bill, New Hampshire okaying state Bitcoin holdings, and the OCC confirming banks can custody crypto.
Wow, okay. So less uncertainty, more green lights. What about actual money flowing in, institutional cash?
Still strong. The spot ETFs are a big channel. Some analysts in the sources see maybe $55 billion flowing through ETFs this year.
55 billion. That's significant ongoing buying.
Yeah, and some of that might even be shifting from gold ETFs, plus, BlackRock's fund keeps showing consistent buying.
Now, the sources really highlighted something about U.S. retirement funds, a 401k development. That sounds potentially huge.
It really could be. The U.S. Department of Labor withdrew this old guidance from 2022 that basically warned against crypto and 401k.
Remind us, what's a 401k?
It's the main U.S. retirement savings plan. Employers contribute. It's massive. The sources say around $8.9 trillion in assets, 70 million people.
Okay, so removing that warning, what does that actually do?
It essentially removes the government sort of pressure that stopped companies offering crypto. It opens the door.
Opens the door to potentially how much capital? What did the analysis suggest?
Well, just a small allocation, say 1% of that $8.9 trillion. That's around $89 billion. Enough to buy maybe 765,000 Bitcoin.
That's staggering. Is there demand for it?
Seems so. Sources mention younger generations, Gen Z, millennials, are keen. Financial advisors are warming up to it for the long term, too.
So Bitcoin moving into mainstream long-term savings, potentially? Any other positive signs?
Yeah, a couple of things. Real-world use, like record Bitcoin payments at that big conference, and miners like Marathon and Riot, they're holding onto their Bitcoin, not selling it all. That suggests confidence.
Okay, so with all this, what are the price predictions looking like? Short term, maybe end of year?
The sources show analysts getting pretty bullish. Some see maybe 120K, 125K, even 155K possible by mid-June, maybe helped by good economic news.
And longer term, end of 2025.
Ranges like 150K to $200K appear. Some optimists even mentioned 250K, linking it to global money supply and this new demand.
Right, a very positive outlook based on those factors. But, markets aren't just one-way streets. What about the downsides, the risks mentioned in the material?
Absolutely critical to cover that. The sources definitely flag risks. First off, simple profit taking. Price ran up fast, so some early buyers might sell. That can cause dips.
Natural enough after a big climb. What else?
Broader economic stuff, like that U.S. jobs report coming up, or any unexpected global events, they can shake all markets, including Bitcoin. Volatility is part of the game.
Does Bitcoin strength mean everything else is fine? What about altcoins?
Not necessarily. The sources mention altcoins might react differently, maybe drop harder during shaky periods. That adds to overall market jitters.
Any technical warning signs analysts pointed out?
Yeah, some analysts highlighted potential issues, things like price divergence, price goes up, but momentum indicators don't quite follow. They looked a bit like 2021 before corrections.
So technical caution.
Exactly. One perspective mentioned a possible pullback to maybe 64K if support breaks. It's just one view based on charts, but it's out there as a potential risk.
Got it. And the ETFs, they only flow in one direction.
No, definitely not. The sources noted times when money flowed out, like $278 million recently. Big outflows can cause short-term drops. And politics, while it helps adoption, Bitcoin getting too political could be its own risk.
Okay, so pulling it all together then, what's the takeaway for someone watching Bitcoin now?
Strong positive forces are at play. You've got regulatory progress, huge potential institutional demand, especially from that 401k angle and ETFs. That's driving optimism. But it's still volatile. You've got risks from profit-taking, macro shocks, those technical warnings. It's not a smooth ride guarantee.
So for investors, different approaches maybe.
Seems like it. Long-term folks might see the fundamental story strengthening, maybe buying dips. Short-term traders, they need to be cautious, manage risk, watch for those swings the sources flagged.
A really dynamic situation. Thanks for breaking down those sources for us.
Always interesting to see the different pieces.
Here's something to think about. If that massive pool of 401k money really starts flowing into crypto, even just a bit, how could that change not just crypto prices, but the whole idea of mainstream long-term saving and wealth building for everyday people? Chew on that. We'll catch you next time. Okay, hey there. Welcome back to the deep dive.
Yay.
And today we're looking at Bitcoin, specifically what's been going on between, say, June 5th and June 14th, 2025. I really felt like a period with a lot of conflicting signals, didn't it?
It absolutely did. You had this really positive momentum building, but then it collided with some pretty serious global events.
Right.
So our goal in this deep dive, what pushed Bitcoin up, what pulled it back down, and what does that friction tell us, especially if you're trying to get a handle on this market?
So let's start with the positive stuff. Early June, say up to around the 12th, things were looking pretty good. Yeah. What was driving that?
Yeah, the sources definitely showed an upward trend then. A few things were lining up. Big picture-wise, there was this growing hope globally about maybe interest rate cuts coming.
Okay, lower rates helping riskier assets.
That's often how it works. Plus, the sources mentioned some optimism around trade talks, which, generally suggests a calmer economic outlook.
Makes sense. General good vibes. Was there anything more crypto-specific pushing things?
Oh, absolutely. And the sources highlighted this as pretty significant. There was a lot of buzz about potential changes in U.S. crypto policy.
Ah, the regulatory angle.
Exactly. Specifically, expectations around former President Trump maybe taking a more, let's say, crypto-friendly stance. That kind of talk in the U.S. tends to really boost market sentiment.
Okay, so a mix of macro hope and crypto politics. How high did Bitcoin actually get during this phase?
Well, the price action was pretty strong. The sources show it pushed clearly past that big $100,000 level.
Which is a huge psychological barrier.
Definitely. And it didn't just stop there. It went up towards $107,000. And around June 10th, the sources noted it was even testing $110,000 briefly.
Wow, testing 110K, that's serious momentum. But was it just sentiment or was real money moving in? What did the sources say about the drivers?
That's where the institutional story gets really interesting in the material. The sources emphasized continued heavy inflows into those U.S. Bitcoin spot ETFs.
Right, the ETFs. We've talked about those before. Big numbers.
Yeah, huge. And that trend just kept going into June. Positive net inflows.
Okay, just remind us quickly, what does that ETF inflow really mean for Bitcoin?
Well, basically, these ETFs are like regular investment products traded on stock exchanges, but they hold actual Bitcoin. So when billions flow in, it means big players, institutions, maybe pension funds are buying Bitcoin through channels they understand and trust. It's like traditional finance getting seriously involved.
Gotcha. So it's opening the door for a lot more capital.
BlackRock's EPF, the one called iBeat. The sources reported that by June 10th, it held, get this, 662,500 Bitcoin.
Wow. 662,500. That sounds like a lot.
It is. The sources framed it as really symbolic. It's over 3% of all the Bitcoin that will ever exist.
Over 3% in just one ETF.
Yeah. More than many big crypto exchanges hold, more than most corporations. It just shows, these traditional giants aren't just testing the waters. They're taking major positions. That's a powerful underlying driver.
Okay, that definitely paints a bullish picture. Institutional buy-in. Did the price charts themselves show anything interesting, technically speaking?
The sources did mention some technical analysis. Specifically, a bounce Bitcoin made around the $103,000 level earlier in June.
Okay.
Well, one analysis highlighted in the material pointed out this bounce looks similar to one back in October 2024. And after that previous bounce, Bitcoin apparently went on a big rally. So seeing support hold again at 103K was seen by some as, potentially setting the stage for new highs. History repeating, maybe.
Interesting. So strong fundamentals, institutional cash, positive technicals, but then things shifted, right? Around June 13th, what happened?
Exactly. The positive mood kind of hit a wall on the 13th. And this was purely down to events happening on the world stage, geopolitics.
Was this the specific news?
The sources point to the news that Israel had conducted airstrikes on facilities in Iran. That immediately spiked tensions in the Middle East.
And the market reaction, I assume it wasn't good.
No, not at all. The sources say it was immediate and sharp. Bitcoin and the wider crypto market just sold off quickly.
How much are we talking?
Bitcoin dropped over 4% in just one day. It fell back below that $103,000 support level we just mentioned, dipping towards $102,000.
Ouch. A 4% intraday drop is pretty rough. Is this a known pattern, Bitcoin reacting to Middle East tensions?
The sources actually noted it was similar to what happened after an Iranian action the previous April. That also caused a sharp drop. So unfortunately, yeah, it seems these geopolitical flare-ups have become a trigger for volatility.
So when something like this happens, investors get nervous, they sell risky things and buy safer things. Is that the idea?
That's exactly it. It's called risk-off sentiment. When global uncertainty jumps, people tend to pull back from assets seen as speculative or volatile, and they move into traditional safe havens. Bitcoin definitely acted more like a risk asset. It fell alongside stocks. It didn't rise like physical gold did.
So not quite living up to the digital gold narrative in that moment.
In that short-term shock, no. It doesn't mean the long-term debate is over, but its immediate reaction was more correlated with risk assets like tech stocks.
That's really important for people to understand. What other uncertainties did the sources mention connected to this?
Just the general overhang, the worry about further military action, potential escalation, maybe wider conflict. That kind of background noise keeps markets nervous and prone to reacting sharply to headlines.
Right, that lingering fear factor. Anything else bubbling under the surface?
Not necessarily taking huge profits off the table back into fiat currency just yet.
Interesting nuance. Okay, let's try and wrap this up. We've seen the positive momentum from institutions and policy hopes, then the sharp pullback from geopolitics.
And those bullish long-term price forecasts you see, mentioned Cathie Wood, Tom Lee, projecting really high numbers down the line. That's one side.
But the other side is
the clear vulnerability to short-term shocks,
Yeah.
like those airstrikes. They can cause sudden, painful drops, regardless of the long-term picture. It's a real push and pull.
Did Bitcoin show any strength during that pullback, though, or did it just collapse?
It showed some resilience, actually. The sources noted that even with the drop, it did manage to stay above $100,000 and found buyers around that $103,000 level again. So it bent, but didn't completely break, suggesting some underlying demand was still there. For the medium term, watching those support levels like 103K and keeping an eye on whether ETF inflows continue might give some clues.
And longer term?
Longer term, the fundamental story institutions, adoption that the sources highlight, still looks strong. That supports the potential for growth over time.
It really feels like these 2 weeks captured Bitcoin's essence. Huge potential, but tied closely to unpredictable world events.
That's the friction, yeah. Okay, let's unpack this. Welcome to the deep dive. Today we're jumping into Bitcoin. It often seems really complex, maybe even a bit intimidating if you're curious about crypto but not sure where to start. Right now, Bitcoin, or BTC, is trading around, $103,760. It swung between about 106K high and 102K low. But the numbers just scratch the surface, right?
Absolutely. What's really fascinating isn't just the price swings, but how Bitcoin handled some, serious turbulence recently. Around mid-June 2025, our mission today, to connect that recent behavior, its resilience and its volatility, to what it means for you, the everyday investor, helping you understand its sort of a hybrid nature.
Yeah, that resilience part is key, because even with all the, the geopolitical noise, big players were still pouring money in, which feels significant.
It really is. Think about the U.S. spot Bitcoin ETFs. They saw, get this, 8 straight days of inflows. That's money coming in.
8 days straight. Wow.
Yeah, and on June 18th alone, it was around $388 million. Big funds like BlackRock's IBIT were leading the charge.
So these huge established players are buying in consistently. What does that tell us? Is it becoming less risky?
It definitely signals growing institutional confidence, yeah. It suggests a stronger fundamental base beyond just speculation. BlackRock's fund holding over 3% of all Bitcoin. That's major validation.
3%, okay. And it wasn't just ETFs, right? Corporations were buying too.
Exactly. MicroStrategy, Michael Saylor's company, they added another 10,000 Bitcoin, about $1 billion worth mid-June. And you're seeing newer players, too, like Trump Media filing for crypto ETFs, building treasuries. It suggests wider corporate interest is growing.
Okay, so institutional money, corporate money. What about the bigger picture, like the economy?
That helped, too. Expectations of Fed rate cuts may be slowing inflation. That usually makes assets like Bitcoin look more attractive, plus some positive signals on the policy front.
So a lot of positive signs. Strong demand, big buyers, helpful macro trends makes it sound almost bulletproof.
Almost. But then, geopolitics enters the chat.
Right. And that's where we saw the other side. Between June 12th and 14th, escalating Israel-Iran tensions hit the price hard.
It did. And it really forces that collision. Is Bitcoin digital gold a safe haven?
What did we see happen?
Well, in that specific moment, it acted much more like a risk asset, not a safe haven.
How so? What was the price reaction?
It was fast. Bitcoin dipped below 104K. Then after reports of Israeli strikes, it dropped maybe 2-4% pretty quickly. Fell from around 108K down near 103K, broke that 105K level.
And where did investors put their money then?
Classic flight to safety. Money went into gold, which hit a 5-week high, and the US dollar strengthened. Traditional safe havens.
So Bitcoin didn't perform like gold during that crisis moment.
No, not in the short term. It showed it's still vulnerable to those big geopolitical shocks, reacting sharply downwards. It highlights this dual nature.
Okay, so wrapping this up,
Yeah.
what does this mean for you, the listener, trying to make sense of Bitcoin? We've seen it get knocked by global events, but also show real strength from big institutions buying in.
Exactly. The key takeaway is understanding this hybrid profile. It's volatile in the short term, yes, reacting to headlines, but it also has this growing strong foundation of institutional support. So, short term, expect that volatility, maybe around 103K, 104K, especially if geopolitical news keeps breaking. Risk management is super important.
And looking out a bit further, medium term.
Keep watching those ETF flows. Continued inflows show that institutional confidence is holding up. And watch key support levels, like 103K. Does it hold?
And the really big picture, long term.
Well, analysts are still talking about high targets, $200K even. Based on wider adoption, macro trends, that institutional embrace is a huge part of that story. But even with that long-term potential, managing the short-term bumps, the volatility is essential. It's definitely not a set it and forget it kind of asset yet.
So here's a final thought. Given Bitcoin's ability to bounce back, combined with this deep institutional buy-in, are we seeing an asset truly maturing into something foundational? Or is it still just a fascinating, maybe unpredictable digital wildcard, something to think about?